Hello and welcome everyone to our webinar on the food and beverage sector in the CEE region. This webinar is part of a series of industry webinars organized by EMIS and Mazars. My name is Álvaro Díaz and I will be your moderator for today's session. We have an exciting agenda packed with insights from industry experts. As an introduction, today we have the privilege of hearing from distinguished speakers who will shed light on various aspects of the food and beverage sector in Central Eastern Europe. Our speakers will delve into market trends, value creation, challenges of post-merger integrations, and of course, much more. Introduction of our speakers. First up, we have Nicoleta Slavsheva. Nicoleta is an industry researcher at EMIS, and she will be presenting the overview and market trends based on the main findings of the latest EMIS Insights reports on the food and beverage sector. Following Nicoleta, we'll hear from Luca Rosman, manager in the financial advisory at Mazars, and Miriam Marasovic, partner for accounting and outsourcing and management consulting in Mazars' Asia sub-region. Miriam has more than 20 years of experience in executive positions in large regional food and beverage companies, being responsible for corporate finance, capital market activities, and business development. Some house rules: we encourage all participants to actively engage with our speakers. Please feel free to prepare your questions throughout the presentation, as we will have a dedicated Q&A session at the end. Thank you all for joining us today. We are confident that the webinar will provide valuable insights into the food and beverage sector. And remember, if you cannot stay for the entire session, you can still register and we will send you the webinar recording via email. You will find the full version of EMIS Food and Beverage Sector Report on GoToWebinar in the webinar handout section. Please feel free to download it. Without further ado, let's dive into today's presentation. Next slide. So for those of you who do not know, EMIS is part of ISI Emerging Markets Group, which consists of 3 different brands. EMIS is an AI-powered research platform combining machine learning, analytical and generative AI to elevate content curation and discovery. Secondly, we've got RED, which provides alpha-generating intelligence on special situations and distressed debt in emerging markets. And finally, we've got CIC Data, which delivers clarity and insight on global markets through macroeconomic, industry, and alternative data. On the next slide, we will see the EMIS facts. So as I mentioned before, EMIS provides company, industry, and country research. But most importantly, we've got the biggest private company database in emerging markets with over 11 million company profiles. We actually cover 197 global markets and 370 industry sectors, aggregating over almost 450,000 research reports on an annual basis. Most importantly, we've got the best M&A deal database in emerging markets, and in particular in CEE region, with over 180,000 deals. We also aggregate 40,000 news stories per day from 4,500 local and global sources. Content is available in 16 languages, and we've got the translation functions as well. The report that you can download on GoToWebinar is just a sample report, but we've got loads of the different EMIS Insight reports covering different industry verticals. So that's all from my side and the introduction of EMIS Insights. So now I will pass the presentation to our speakers. So first is Nicoleta. So Nicoleta, the floor is all yours.
Thank you, Álvaro. Good day, everyone. I'm also pleased to welcome you to our webinar focusing on the food and beverage industry and Central and Eastern Europe. The presentation will start with some brief review of the role of the food and beverage sector in key Central and Eastern European economies, and those are Poland, Hungary, Czechia, Romania, and Turkey. We will also compare the market trends in the food and beverage industry because although there are similarities between the European Union and the countries of Central and Eastern Europe, there are also important differences. And finally, I will give you some perspective about the production trends and the performance of external trade of the food and beverage industry in Central and Eastern Europe. It goes without saying that the sector holds a very significant sway within the European economic landscape. It is actually estimated to be the leading manufacturing industry in the European Union, and this is according to an estimate by Food Drink Europe, this is a European food industry confederation that gathers industry associations from the EU member countries. According to this same confederation, the sector serves as a primary employer in the union, and it contributes some 15% of total formal jobs, and it is also responsible for 2% of the value added generated within the union. The relevance of the food and drinks manufacturing sector in the economies of Central and Eastern Europe is very similar to the one in its European counterparts. For instance, the sole production value of foods and beverages stood at some 400 billion Polish zloty in 2022, and this represents some 14% of the country's GDP. The situation in Romania is largely the same. According to estimates by the World Bank, the GVA of the food and beverages industry accounted for 14% of the GDP in the country. In Hungary, the industrial production value of the industry stood at some 6.5 trillion Hungarian forints in 2022, and this comprises about 10% of the GDP of the country. Meanwhile, Turkey witnessed a notable rise in household expenditure on food and beverage products, and these values reached 2.4 trillion Turkish liras in 2022, and this accounted for 16% of the GDP of the country. Now, after this brief review of the role of the sector in the local economies, I would like to say some words about the market trends. In 2022 and 2023, the food and beverage sector in Central and Eastern Europe has faced notable challenges. Among them, of course, is the conflict in Ukraine, because it has sparked a surge in energy prices, consequently driving up producer prices and overall inflation within the region. This conflict has also disrupted supply chains and resulted in shortages of crucial commodities. The dynamics of the food and beverages market in the European Union and the leading economies of Central and Eastern Europe exhibited notable fluctuations over the period of 2022 and 2023. The sharp rise in prices during 2022 had a discernible impact on demand, although this impact was somehow mitigated by the relatively inelastic nature of demand for food and drinks. Throughout 2022, inflation rates throughout the European soared. The average for the European Union stood at more than 9%. However, the inflation on food and beverages surpassed significantly this figure, and the average for the European Union stood at almost 12%. In a similar way, among the leading economies of Central and Eastern Europe, inflation rates were particularly high. In Czechia, Hungary, Poland, and Romania, inflation ranged between 14 and 15%, while the price increases of food products and non-alcoholic drinks ranged between 15% in Poland and almost 28% in Hungary. Turkey encountered an exceptional situation, with general inflation soaring to 72%. At the same time, the prices of food and beverages expanded by about 86%. The steep increase in prices posed challenges to consumer demand, of course, and consumers started adjusting their consumption patterns, and demand slowed down. In 2023, because of the efforts by governments in the region to ease inflationary pressure, there was some improvement. And the general inflation in the EU fell to 6.4%. However, the increase in the average price of food and non-alcoholic drinks remained notably higher. It was actually almost double the overall inflation rate. A similar trend was observed in the leading economies of Central and Eastern Europe, where food and beverage inflation remained elevated compared to general inflation rates. As we will see on the next slide, the past 2 years were difficult from a business perspective as well. In 2022 and 2023, the producer price index for manufacturing, especially in food and beverages, saw significant ups and downs. In 2022, producer prices in the manufacturing industry surged across Europe and hit particularly hard Romania, Hungary, Czechia, Poland, and Turkey. For instance, in Turkey, the producer price index for the manufacturing industry expanded by 110% year-over-year. This increase of production costs put immense pressure on the industry margins and forced the business to manage costs very carefully. In 2023, there was a relief in producer price increases, and across the European Union, the manufacturing industry producer prices rose by only 1.5%. This was a stark contrast to the almost 16% hike registered in 2022. Even in Central and Eastern Europe, the trend continued. Poland even experienced a slight decline, while Hungary, Romania, and Czechia saw modest increases. In Turkey, the producer prices continued to rise, although at a less dramatic rate compared than the one registered in 2022. In the food and drink sector, as we will see on the next slide, 2022 saw higher increases in food manufacturing compared to beverages. Poland, for example, saw a 24% increase in food manufacturing prices versus 10% in beverages only. Similar trends were seen in Romania and Hungary, while Turkey saw notable increases in both segments. Moving to 2023, increases in producer prices of foods and drinks were more moderate, but still they remained much above the overall manufacturing average. In Poland, Romania, Hungary, and Turkey, there was increases in both food and beverages manufacturing, though at a lower rate than before. This improvement in the growth rate of producer costs allowed the business to recalibrate strategies and enhance competitiveness in the market. Overall, the shift in pricing provided an opportunity for industry to navigate challenges more effectively and foster sustainability, growth, and resilience. In 2022, despite challenges like inflation and rising costs, the food and beverage industry in Europe, and especially in Central and Eastern Europe, managed to increase production, as we will see on the next slide. In the EU, production of food and drinks increased by 2% against 2021. In Poland, the surge was more significant. It was almost 8%, and this positive performance was mainly driven by increase in production in meat and dairy categories. During 2022, Poland saw 16% year-over-year increase in exports value of food and beverages. And the most exported product, the one that drove this increase in exports, was cereal preparations, meat preparations, residues, and animal fodder, and also cocoa preparations. During 2022, the imports of food and beverages to Poland also rose. And the products most imported in the country were residues and animal fodder, fats and oils, and also cocoa and cocoa preparations. The performance of production in the sector was more modest in Romania. It grew only at 2.6% in 2022. And the sector had some challenges in vegetables processing and also in the dairy segment. Despite those difficulties in production, the local food and beverages sector saw a 29% year-on-year increase in exports in 2022. And this rise was mainly driven by sugar and sugar confectionery, oils and fats, and beverages. During the year, Romania reported also increase in the imports of food and beverages. And the country, the most imported categories in Romania were residues and animal fodder, fats and oils, and cereal preparations, with fats and oils experiencing the highest import growth rate. Hungary reported a very similar increase in the production of food and beverages during 2022, very similar to the one witnessed in Poland. It was also almost 8%. And it was registered despite of the difficulties that the sector encountered in meat production and also in dairy processing. The interesting fact about the local sector in 2022 is that there was a significant investment activity. Significant increase of investments, and the most important investments were directed towards improvement of capacity and machinery and equipment in the confectionery and soft drinks product categories. During 2022, Hungary achieved a new record high trade surplus, with significant export growth mainly in residues and animal fodder, fats and oils, and beverages. Imports also rose during the year, particularly in residues and animal fodder, fats and oils, and cereal preparations, with fats and oils again showing the highest import growth rate. In Turkey, industrial production of the sector rose by 3%, almost 3% in 2022, and it registered a varied performance in agribusiness, in the processing of agricultural commodities. Turkey also witnessed a significant rise in export during 2022, and it was mainly related to fats. The export growth was mainly related to fats and oils, vegetable and food preparations, and cereal preparations. Fats and oils exhibited the highest export growth during 2022. Imports also increased during the year, and fats and oils were the most important product. Despite the positive performance of the industry in 2022, the momentum shifted in 2023 due to the lingering effects of the tough market environment from the previous year. Consumers, cautious after experiencing record high inflation, adjusted their spending behaviors, and this impacted the food and drink industry performance. Consequently, the output of the industry in the European Union declined by 1.5% year-over-year in 2023, and this was the first decline since the onset of the COVID pandemic in 2020. This decline was even more pronounced in Central and Eastern Europe, with Hungary experiencing production fall of 11%, while the output of the sector in Poland and Turkey significantly slowed down compared to 2022. In 2023, Romania stood out as the sole country among the leading economies of Central and Eastern Europe, where the growth of the industrial production of food and beverages was higher against 2022. This positive performance can be partially explained by the launch of two government programs in the late part of 2023. These programs are oriented to bolster the food industry development and ensure that agricultural production grown domestically are processed within the country. Together, the two programs have a budget of more than 1 billion euros, and the funding is provided by the European Investment Bank. Despite the challenges encountered in 2023, the forthcoming year presents an opportune moment for the food and beverage industry to regain momentum and growth. According to forecasts by the European Commission, the inflation will continue to slow down, and this will improve the confidence in the market. Additionally, wages across the EU member countries are on a trajectory to align more closely with inflation rates, which is expected to prompt and stimulate demand. From a more operational perspective, the companies of the sector are presented with some challenges that they will have to address. Notably, in March 2024, the European Union has reached a historic agreement to ban single-use plastic packaging for fresh produce and fast food, among others. This legislation aims to address the increasing problem of packaging waste within the Union. According to the proposed legislation, all packaging in the EU market must be recyclable by 2030. If approved, the new regulation will require a substantive shift in operations of food and drinks manufacturer in the region, and this will, of course, require some significant investments by the companies operating in the Central and Eastern European food and beverages sector. This was, in few words, the main trends observed in the food and beverages industry in the last 2 years. And with this, I will pass over to you, Alvaro.
Thanks, Nicoleta, for sharing those valuable insights in the food and beverage sector. If you have any questions for Nicoleta, please post them on the chat, and we will address the questions at the end. Our next speaker is Luca, who will be speaking about market trends, value creation, and challenges of post-merger integrations. Luca, the floor is all yours.
Thank you, Alvaro. Can you confirm just that you can hear me and see me, because I have encountered some problems with home Wi-Fi?
We can hear you and see you perfectly well.
Okay. Hi, everybody. My name is Luka Rožman, and I am financial advisor and manager at Mazars in Adria sub-region. I'm located in Zagreb in Croatia. It's my pleasure to have an opportunity to be a part of today's webinar, and my colleague Miriam and I will talk about food and beverage market trends in CEE region, value creation, and challenges of post-merger integrations. Before we start with today's topic, I would like to say only a few words about Mazars. Rota, you can move the slides. Okay, we are one of the leading international advisor and audit firm, having more than 50,000 professionals spread over 100 countries. And we have recently created a new network together with American Forbes, and starting from 1st of June this year will be called Forbes Mazars. Unfortunately, I can't see that you're moving the presentation, because I think I have some problems with the Wi-Fi, but okay. As you can see, we have a really strong CEE presence, covering the most of the CEE countries. And on the next slide, you can see our service portfolio. This is basically the range of services offered by Mazars, and it's interesting that advisory revenue share surpassed audit services, our core business, proving that more and more clients are looking for professional consulting services. On the following slide, you can see our M&A practice. As part of that, we are really helping, supporting, and advising sellers in selling their business and buyers in acquiring another businesses. Beside that, we have management consulting practices, and our management consulting department also offers technology and digital consulting and risk consulting services. And that's actually very superficial about Mazars, and we will switch to today's topic, which is M&A trends in the food and beverage sector. Alvaro, I switched off the camera because I have some problem with frozen the presentation. I think it would be better. You can hear me well, or?
Yes, we can hear you perfectly well.
Okay. First of all, I want to point out that that this data that we shown in the following slides base, which records only transactions with deal value above 5 million American dollars, and therefore database doesn't cover all transactions within the sector. Beside that, a lot of transactions do not have disclosed commercial conditions such as deal value and transaction multiples. On the chart above, you can see the last 6 years. Can you return the slides? Okay. You can see the last six years, having 2 years before COVID outbreak, 2 years of COVID period, and then 2 years in post-COVID period. In CEE, more than 300 F&B transactions are recorded in this period, and you can clearly see that the COVID had impact on the transactions realized in 2020, proving that investors were quite cautious about the challenges in COVID period. However, due to a favorable macroeconomic conditions, huge money supply, very low interest rates, and so on, M&A market has quickly recovered, and 2022 was a record year in terms of transactions realized in M&A segment. There was another slowdown in 2023, mainly due to higher interest rates, but anyhow, year 2022 could be considered as extraordinary, since many of deals has overflowed from COVID period. 1/4 of total deals were realized within agri-processing subsector, including fruits, vegetables, and cereal growing. And the highest drop in number of deals recorded in 2020 was in beverage and frozen food subsectors, while some subsectors, despite the COVID outbreak, have recorded rise in number of transactions. For example, that was agri-processing subsector, meat, dairy products, food ingredients, and fish, if I can see well. The peak of numbers of deals was in 2022. However, some subsectors have recorded decline, especially notable in meat and frozen food subsectors. Okay, we can go to the following slide. There are some fun facts, to somebody fun, to somebody not, but some facts about the transactions in CEE period, in CEE countries in the period between 2018 and 2023. Only 1/4 of deals realized between this period had disclosed revenue of the target. Out of this, 65% of targets were medium companies, so having 10 and between 10 and 100 million euros of revenues, with the average revenue of 45 million euros. On the first chart, you can see that more than 60% of transactions were realized domestically. So in other words, less than 40% were cross-border transactions. Basically, more than 60% of transactions were realized in Russia and Poland, the biggest countries in CEE region. It's interesting that while observing M&A deals in Czech Republic and Hungary, it's interesting that the most deals there happened in 2020. Example, Hungary had 9 deals in 2020, which is almost 50% of total deals in the last 6 years. And beside that, Poland, for example, had a huge decline in deals in 2020, from 15 in 2019 to only 3 in 2020. And also it's interesting that F&B sector is actually the sector with one of the highest share of strategic investors in M&A transactions that were almost 80% for CEE. On the world level is exactly 80%. And most of the investors, almost 3/4, came from the CEE region. And while only, as you can see, 7% of them were not from Europe. Okay, we can go forward. And in the meantime, home network improved. Okay, there are some highlighted transactions in the last 6 years whose value has been disclosed. Is interesting that firstly, Grupa Żywiec, Polish group Żywiec, bought brewery Namysłów Pils, and later actually was sold to Heineken. Another transaction that's interesting was between Croatian Fortenova Group and Serbian Diamant. This transaction was related to squeeze out of minority shareholders. Another interesting transaction was between Coca-Cola and Serbian Bambi. Bambi is a confectionery company. They producing biscuits, I think. And this transaction is a proof that Coca-Cola is looking for diversification of its business, which is also the example of their competitor Pepsi company, who also made acquisitions in CEE confectionery subsector. Okay, we can go on the next slide. Food and beverage in Western Europe. Okay, here I wanted to show similarities between F&B sector in Western Europe and in CEE region. Basically, transactional activity trend was almost the same, with one distinction. Namely, a number of transactions realized in 2023 in Western Europe was lower than in 2021, while in CEE region 2023 was higher than in 2021. And I would consider that the reason lies in the delay between the beginning of raising and lowering of interest rates in Western Europe versus CEE countries. Distribution of subsectors are similar as in the CEE. The leader is agri-processing, followed by beverages. And on the chart below, you can see the movement in EV/EBITDA multiples in Western Europe. I didn't show CEE multiples movement due to the in CEE region due to the lack of the data for some years, and for Western Europe, you can clearly see that EV/EBITDA multiple was the highest in 2021 as a result of huge money supply and very low interest rates. Raising interest rates starting from middle of year 2022 had an impact on company valuations for sure. And on the right side, you can see distribution of EV/EBITDA multiple within the subsectors. The highest multiple was recorded in frozen food subsector, that was 13.3, and the lowest in baked goods, 8.3. Based on the deals happened between this period of last 6 years, the realized EV/EBITDA in Western Europe was 10.7, while in the CEE region was 9.7. And I would expect that this difference is due to the spread in country risk premiums, because Western Europe countries tend to be less risky than CEE countries. I should note that these are reported EV/EBITDA multiples. In other words, EBITDA of the companies was not normalized. But in practice, for more accurate company valuation, we do not rely on transactional multiples, but insist on discounted cash flow method approach, where the projections of future operations are pivotal for the valuation. Okay, and the last slide from my side is about some M&A outlook for the year 2024. What are we expecting in terms of M&A transactions in F&B sector? We expect that this year would be better than the previous year due to the sum of the following reasons, such as the first one, inflation has been easing, and we expect that companies will be able to put their focus on strategic objectives, such as M&A transactions. They will not need to focus on raising prices and some problems in their operations because of that. And second one, we would be expecting that company valuations have touched the ground since the interest rates already started to fall. And the last one, we are witnessing changes in some consumer behavior, moving towards some healthier foods alternatives, and we are expecting that some of the companies would try to capture significant growth in those sectors through M&A transactions. Okay, I hope that you heard everything despite these challenges in my network. Apologies for that, and I will let my word to Miriam.
Well, thank you, Luca. In my part, I'll talk about the industry and market trends and how they affect potential for value creation, as well as the challenges of the post-merger integration. In addition to the trends that we've been talking about in the first part of the presentation by Nicoletta and Luca, food and beverage sector is faced by a number of external trends that we can see on the next slide. Industry and market trends that affect profitability, risk potential of the companies, as well as their value creation potential. The first couple of trends are connected with changes in consumer behavior that also Luca has been talking about. First of all, like focus on convenience. Consumer are more focused on health and wellness. They are looking for more healthy ingredients, less processed food, less sugar, additives, preservatives, etc. More functional products arising on the market. And all these trends are actually providing the opportunity for the companies to capture the price premium segment of the market. Unfortunately, there are a lot of trends present in the last couple of years that are putting a lot of pressure on the margin. In addition to the trends that Nicoletta already covered in the first part, we see huge price sensitivity expressed by the consumers due to inflationary pressures and lower disposable income. It all influenced also to decreased brand loyalty and increasing trend of the private label on the market. Another significant trend affecting the industry is increasing negotiation power of retailers, deriving from the further consolidation of the retail market, then strengthening of the modern retail compared to the traditional trade, as well continuous trend of the increased market share of the discounters. And we all know that discounters have, with discounters, the producers have limited access to the shelves. Then some other trends are supply chain disruptions facing in the last couple of years, labor market challenges, and ESG regulations, etc. As a response to all these challenges, the companies, in order to succeed and preserve or increase value, the successful ones are becoming more and more flexible and are adopting some new trends that we can see already in the market and that are presented on the next slide. So, for example, more and more companies are introducing some innovative products in their product portfolio, deriving from this changed consumer preferences. For example, ready-to-cook, ready-to-eat products, some healthy alternatives to dairy, to meat, etc. And this enables the companies to capture this price premium segment. Then revenue growth management strategies are becoming more and more important. For example, pricing strategies, promo optimization tools, trade marketing tactics, etc. And what is also seen is that commercial finance expertise is gaining a more and more significant role in the companies, especially large ones and the medium size. Then cost optimization, automation, introduction of new technologies, especially in production and supply chain, digital transformation, all of this have become new mantra of the sector, as already has been mentioned, because with this, all these trends putting a high pressure on the margin, the companies are looking for the way how to, on the sustainable long-term way, to improve their cost base. And the only long-term sustainable way is actually to make some adjustment to the processes with automation and digitalization, compared to plain cost-cutting initiatives that we have witnessed maybe so far, that can produce some positive effects only in short term. Then we also are witnessing some new interesting trends that are arising. For example, innovative route-to-market strategies. For example, with the rise of the e-commerce and especially with a discounter gaining share and limiting access to the market, the companies are more and more seek alternative ways and how to expand their direct-to-consumer capabilities, or internally or by acquisitions. Another interesting trend is called nearshoring. It's connected with keeping their supplier base or inventory locally. And also some companies are also looking for vertical integration as the way how to handle the issue with the sustainable supplier base. In the next slide, when we compare CEE region with Western Europe, what is happening is that the trends in CEE region are typically lagging behind. There is a time gap of few years until the trends are spill over, but it's not so straightforward. So it does not mean that what we see, for example, in North America or Western Europe today is going to be in 5 years in CEE. because there are some structural differences, for example, in consumer preferences. For example, recently in our region, we have seen one trend with hard seltzer. These are the category of beverages that used to be very popular in North America, a huge hit. And it was also a huge failure once it was launched in the Adria region. So it proves that not everything is going to work. Another interesting fact is that the CEE countries are definitely more branded markets than it is the fact for Western European countries. It is proven by the fact that despite the private label increasing their share under the influence of the price sensitivity, we still see that it's in the CEE region, average is 17% of the private label share compared to 40%. It's a huge difference, and it's a good thing for the branded goods producers. Another interesting fact is that when we are looking at the total EBITDA profitability of the food and beverage industry, a few mega companies like Danone or Nestle, Unilever, in Western Europe are holding, actually, they're holding 85% of the total profitability share, and the significance of the small and medium-sized companies are insignificant. Compared to Western Europe, CEE region, sorry, where the small and medium companies are holding something less than 40%, and thus giving the opportunities for the industry for the further consolidation of the market. As well, on the right-hand side on the graph, we can see the evolution of the profitability trend. When we compare in the last 5 years, CEE versus Western Europe in food and beverage sector, we see that CEE region has much higher profitability rate increase on average, as well as profitability margin increases in this period. These are compound average growth rates. To conclude, we can say that CEE region food and beverage sector is in the good position in terms of value creation. On the next slide, given all these trends that are putting the pressure on the margin in the industry, but also given taking into consideration that food and beverage industry is also more mature industry and with the growth rates stable, but with moderate growth rates compared to some other fast-growing industries like renewables, M&A transaction could be seen as a fast track for increasing or capturing this value that is obviously present on the market, especially as in the food and beverage industry there are a significant potential also for synergies, like better negotiation power with retailers, suppliers, product diversification opportunities, strengthening market positions, also opportunities for optimization in the G&A segment. It's also quite high. However, nevertheless, the opportunities in terms of synergies, whether the M&A is going to be successful or not, it depends very much on how post-merger integration is handled. And to be even to make it even more interesting, the higher the synergy potential between the two companies, usually the more complex it is to handle post-merger integration, and thus the higher risk of the failure. So this brings us to the next last session. I will go through it very briefly. It's the challenges of post-merger integration. On the first slide, we can see that almost 60% of the total deals in general do not produce value, but it's not because that there is no potential for value creation, but it is because the integration has been handled badly. And why is that? We can see on the next slide that on the top of the list, we see insufficient preparation and poor process management, leading to work overload, to chaos, and no control over the process. Then disengaged leadership, communication, change management, cultural fit. This is all very important factors that has to be taken into account. What we have seen also, at least in my practice, that sometimes complexity of IT system integration is underestimated. There are also some specifics for food and beverage industry. For example, preserving the brand equity. It's very important to think about how consumers are perceiving the brand. For example, one example, when two retailers merged and the target company changed the brand name of the stores, overnight lost almost 30% of the customers. Another example is a loss of shelf space and consequently market share. It is connected with the fact that it is always extremely important early enough in the process to introduce strategic partners, especially retailers. We all know that some simple fact like a change of price list or the name of the company, etc., it takes several months. If you're not dealing it as it should be, it could result in out of stock, out of shelf, and consequently losing market share. Also, food safety and supply chain, because in food and beverages, change of supplier, change of production site could mean change in recipe, change in taste, and could jeopardize the image of brand. And the last slide, what should we do? First of all, there are two things: set the framework right and do the planning and preparation phase properly. If you do that, the implementation is really straightforward. It's all about then tracking and monitoring, but planning and preparation should be in the focus. And at that stage, you have to be ensured that integration activities, that the focus is on those integration activities that bring the most value, at the same time ensuring that existing business is undisrupted. And this can be done by setting the clear goals, setting priorities, in advance assessing risk, defining target operating model right, introducing current key customer suppliers early enough in the process, making a detailed roadmap step by step, empowering PMO, ensuring leadership full commitment, change management, communication, etc. So this is in short from my side everything. Thank you, Alvaro.
Thank you very much, Miriam, and thank you all of you attendees as well. Now is the time. If you have any questions to any of our speakers, please post it on the GoToMeeting questions. I see that we already have a couple of questions asked. So I've got here a question from Olga. I think this one is for you, Nicoleta. It's about one of the slides that you presented at the beginning. Olga is asking, how can we explain Romania's historic trade deficits in foods and drinks?
Yes, this is actually quite interesting. Thank you, Alvaro. Romania is a key, actually, the country is a key supplier of agribusiness products in the EU. It exports to the EU sunflower seeds, maize, wheat, apples, barley, grapes, potatoes, and many other products. The truth is that the agricultural sector of Romania is posting chronic trade surpluses, and the main reason for this are the strong exports of cereals, oil seeds, and live animals. However, the situation is not the same in the food and beverages industry, which proves that having a strong agricultural sector is not enough for having a strong food and beverages industry. In 2022, the only category within the food and beverages industry that reported a trade surplus was animal and vegetable fats and oils. This underlines the fact that the food and beverages industry in Romania is still underdeveloped. The capacities in the country are not enough to meet the local demand. And the country rely on the import of meat and related products, sugar and confectionery, cocoa preparations, and many other food categories to meet the demand in the country. There are, however, some positive news in this context. As I mentioned in my presentation, in 2023, the government of Romania has identified this problem and is trying to address it. The government has launched supportive programs and is looking to encourage the development of the processing of agricultural commodities within the country. So looking forward with a sizable domestic market, because Romania is one of the big countries in terms of population and land area within the European Union, and also having a relatively easy access to the EU market, and counting with the government support, the industry looks poised for positive changes in the coming years, and who knows, maybe we will see some significant shifts in the coming years. Yeah, I think this is the frank question, answer to this question.
Thanks, Nicoleta. We've got another question from Sultan that is asking, today everyone is talking about ESG. How do you see ESG affecting the F&B industry, and does it represent an opportunity? I think this question might be for you, Miriam.
Yes, thank you, Alvaro. Indeed, the ESG is a hot topic lately. Everybody's talking about it. And actually, there are two perspectives. The one is from the perspective of the regulation, as also I think that Nicoleta also covered that part in the first part, that perhaps due to some regulations, some of the companies are maybe they would be asked to put some significant investments, and nevertheless ESG is putting a lot of complexity in the process. However, on the other side, the consumers are putting a lot of emphasis more and more, especially the younger generations, on the sustainability, environmentally friendly, and they are expecting for the companies to take care of this part. And in the first stage, the company could use ESG and this sustainability effort as the factor of differentiation compared to the competitors. However, how time passed, everybody on the shelves started to use the green, ESG, environmentally friendly, etc. So the situation has changed. The recent study showed, I think that the study was done in the UK and Western Europe, shows that consumers actually expect food and beverage companies to be the leader in the ESG segment and to be on the forefront. And it means that they will be punished in some way if the company is not doing that. However, what I find very interesting is the consumer are not ready to pay more for that. But on the other hand, as we see in the CEE region is lagging behind some trends. I think, this is my opinion, that we are still in this first stage, and we are still in the position to take advantage for first mover advantage on the market for some companies.
Thanks, Miriam. We've got more questions, but unfortunately we have run out of time. So we will address those questions directly after the webinar to everyone who has asked those questions. Just to recap, thank you to all the speakers and all of you guys that have been listening to this webinar. The webinar recording will be available after the meeting, and we will send you the email with recording link included in the next few working days. As I mentioned at the beginning, this is a series of industry webinars organized between EMIS and Mazars. So if you have enjoyed this session, please make sure to follow us, as we will make all the webinar sessions with other panelists from other industry verticals. So once again, thank you everyone, and have a lovely rest of the day.